So today we're going to unpack the story of UBE Corporation. We're talking about a giant in Japan's chemical industry, and they're at a serious crossroads. This isn't just a simple business case. It's a high-stakes story about survival, reinvention, and betting the farm on a whole new future.
All right, let's get right into it. To really get a grip on where UBE is headed, you have to first understand the massive crisis they were facing. And like a lot of these stories, it all starts when you look at the numbers. And wow, this slide right here is basically the moment all the alarm bells started screaming. Just look at fiscal year 2024. The gap between what they planned and what actually happened, it's not a gap, it's a canyon. They were targeting 400 billion yen in operating profit, and they barely brought in half of that. But the real gut punch? Look at the basic chemicals line. That's their historic foundation, their bread and butter. It was supposed to bring in 155 billion in profit. Instead, it actually lost money. The domino effect? A mind-boggling 378 billion yen miss on the bottom line. Just brutal. So what on earth happened? Well, it turns out the company's old-school commodity markets, things like caprolactam and nylon, were just getting hammered. The big reason? A flood of oversupply, mostly from Chinese competitors, that just absolutely crushed prices and profit margins. It turned what was once a reliable cash cow into a major liability. You know, a crisis like this, it demands a really bold response. You can't just tinker around the edges and hope for the best. And to their credit, UBS leadership got that. Their answer was a fundamental, high-stakes pivot for the entire company. So they rolled out this huge initiative called the UBE Vision 2030 Transformation. And let's be clear, this isn't just some new 5-year plan. This is about redefining the company's entire identity. It's a massive strategic shift away from the chaotic, low-margin world of basic commodity chemicals and a full-throated bet on the high-value, high-margin future of specialty chemicals. Their roadmap is built on 3 really clear pillars. First up, build the future. That means going on the offense, aggressively buying and investing in these specialty businesses. Second, dismantle the past. That's the hard part, systematically getting out of those low-profit commodity lines. And third, unlock hidden value by spinning off their big non-core units, like machinery and cement, to let them fly on their own. All right, let's dig into that first pillar, because this is where the action really starts. We're going to see how UBE is, quite literally, buying its way into a more profitable future. And they are not playing around here. To show just how serious they are about making deals, they created a brand new M&A promotion office that reports directly to the president. What does that do? It cuts through the bureaucracy, speeds up decisions, and sends a crystal clear message to the market. We are here to buy. So the first big shot across the bow was this massive acquisition of the urethane systems business from the German chemical giant Lanxess. We're talking over 80 billion yen. This wasn't just some small add-on. This was a cornerstone move to build out their new specialty portfolio, a real game changer. And you know, this deal was about so much more than just a new product line. UBE effectively bought a ready-made global business in a box. In one move, they got over 700 new customers, 5 factories spread across the globe, and, this is huge, a massive 60% sales footprint in the Americas, a market where they desperately needed to grow. It gave them instant global scale. But that huge Lanxess deal was really just the opening act. They're making smart, targeted moves all over the place. They snapped up API Corporation to get stronger in farm ingredients, they bought a European recycler to get a foothold in sustainable plastics, and they're making a massive investment of their own by building the only plant in the US for key EV battery chemicals. See the pattern? This isn't random spending, it's a highly deliberate strategy. Okay, so that's the exciting part, how they're building the new UBE. But that's only half the battle. The other half, which is arguably way harder, is having the courage to tear down the old one. This timeline really visualizes that painful but absolutely necessary retreat. They are methodically walking away from the very assets that defined the company for generations. By 2028, their core legacy production of stuff like ammonia and caprolactam will be almost entirely gone. It's the very definition of a strategic retreat. And it isn't just about shutdowns either. Rebay is morphing from this sprawling, diversified conglomerate into a laser-focused specialist. They're getting ready to spin off their huge machinery and cement divisions through IPOs. This lets the parent company pour all of its money and brainpower into the specialty chemicals future while letting these other great businesses chart their own paths. Of course, a transformation this huge, well, it costs a ton of money. You can't just wish it into existence. So the big question is, how is UBE actually paying for all of these bold moves? Well, for starters, they're using debt to really fuel this change. To pay for big acquisitions like Lance's, their interest-bearing debt shot up by more than 50% in a single year. We're talking a jump from around 2,100 billion yen to over 3,300 billion. That's a serious increase in leverage. But, and this is a really important sign of their financial discipline, they are managing that risk very carefully. Yeah, the debt-to-equity ratio jumped from 0.52 to 0.84, but it's still sitting comfortably below their own self-imposed safety line of 1.0. So they're taking on debt, but it's a calculated, controlled risk. And here's the real proof. They are putting their money exactly where their mouth is. Out of the 460 billion yen they plan to invest through 2030, a whopping 75% of it is dedicated specifically to growing these new specialty chemical businesses. This is a complete re-engineering of where the company's money is going. Okay, let's pull it all together now. We've seen the crisis, we've seen the three-part strategy, and we've seen how they're funding it. But what does this massive, company-altering shift actually mean for UBE's performance and its future? This right here gets to the absolute heart of their billion-dollar bet. The early numbers from the first half of fiscal 2025 are just incredibly telling. Look at that net profit margin. It exploded from a paper-thin 0.13% to over 5%. That is a monumental improvement. And what this tells you is that their profit is growing because they're selling better stuff, higher margin products, not just because they're selling more stuff or piling on debt. It's a fundamental improvement in the quality of their earnings. And this is the prize they're chasing. These are their specific targets for the end of the decade: a return on sales over 10% and a return on equity over 9%. These are not modest incremental goals. These are the kinds of numbers that elite, top-tier specialty chemical companies put up. So, it all comes down to this one multi-billion-dollar question. UBE is knowingly taking on immense short-term pain. They're shutting down plants, taking on debt, completely remaking their corporate identity, all for the promise of a more profitable and stable long-term future. Will this massive, all-in bet on a specialty future actually pay off? And that wraps up our deep dive into UBE's incredible transformation. You know, if you need this kind of in-depth, data-driven strategic analysis for your own business, you should really get in touch with the experts over at HDIN Research.